I think the best advice you could give anybody and everybody about trading is to take emotion out of the trade. When you're going into a trade, decide what your stop loss is going to be, where you're going to take a profit. Make sure you always take a profit that's bigger than the loss you'd potentially take. Stick to your rules. And when you do make mistakes, make notes of that, make sure you don't do it again. But it's very difficult. Sticking to the rules in trading can be a very, very long and boring job. And generally what people do is they get frustrated and they start breaking their own rules and start taking bigger trades, using a bigger percentage of their overall pot. They tend to run their losses because they become emotional about the trade, and they don't keep tight stop losses. And it sounds very simple, but over and over again, people make the same mistakes. I think a couple of things that were very exciting. Navigating through the credit crunch was a very difficult time for our entire industry, and it was amazing. I think at the time there was definitely a lot more camaraderie between companies. Companies were helping each other out in terms of just working together, navigating through the huge regulatory changes that resulted from the credit crunch. So that was one of the highlights. I think one of the bigger highlights from a customer perspective since then has been this huge bull market we've had and this commodity boom. We've seen a lot of customers have the confidence to invest after the credit crunch and get long the market and get long commodities, and they've made a huge amount of money. And it's nice to see that, having seen a lot of customers have a real tough time after all the banks started collapsing and also after the tech bubble bursting. There were times that everyone thought, I don't think the retail market will ever recover, but it absolutely has recovered, and everyone just needs to look at their own pension to see that they're better off today than they were just a few years ago when we all thought the whole financial market was going to melt down. So there's always ups and downs in the industry, and in fact that's why customers trade. They trade because they can't predict the future, but they know that the future will be bumpy, and they're looking for opportunities in that sort of cycle in the markets. It's always nice when you see a situation where somebody who hasn't come from a huge amount of money but has come on and placed some very sensible trades, stuck to a very good trading system and made a lot of money. And we love that. And, you know, they become little celebrities within the firm, and we'll send them bottles of champagne when they have their best ever month. So there is a real connection between us and our customers. Not that we necessarily know them well, the salespeople may talk to them, but they become sort of mini celebrities within the firm. I think that's quite important. It makes you stay in touch with your customers.